Welcome back to another video. This is lesson 6, price action setups, and in this lesson we'll look more into Japanese candlesticks and how they can be used in trading Forex or any other financial markets. So first of all, what is a price action setup? A price action setup is a particular Japanese candlestick or group of Japanese candlesticks that traders and investors look for that can potentially signal where future price is going to be. And that will make more sense as this video goes on. But as I have mentioned in previous videos, please read through this content as well as watching the video, because you'll gain a much better understanding of Japanese candlesticks and all the material in this course if you read and look at the illustrations as well as watching and listening to the video. So the most common price action setup is probably Pinbars, and these are single candle price action setups. It doesn't matter what the previous candle looked like, it's just one candle. If it has a very long wick with a small body, this is generally referred to as a pin bar. Now with these pin bars, the wick generally has to be just one-sided. We can have a small wick on one side, but these are bullish pin bars, so these big lower wicks and small bodies. These are bearish pin bars. They have very long upper wicks and small bodies. Bullish pin bars, as the name suggests, bullish refers to bullish momentum, and these can signal that price could move higher. So after this candle we may see price move higher. With bearish pin bars, as the name suggests, once again this suggests bearish momentum, and it could signal that future price is going to move down. And there's a real life chart here that's just been pasted to this page. It highlights the pin bars and shows how price has reversed. With this big pin bar, price falls down. Bearish pin bar, price falls down. Bearish pin bar, price falls down. Bullish pin bar, price goes up. Bullish pin bar here, price goes up. But let's look at some on a actual chart. So let's go to the Australian dollar, Japanese yen. This is a 1 hour chart, and let's find a pin bar. So here we go. This is a bullish pin bar. We have this big long wick, lower wick, so it's a bullish pin bar with a small body. Let's see if we can find a bearish pin bar. Here we go. We have this long upper wick with a small body. Now why do these signal future price movement? Well, nothing is definite. These pin bars aren't always going to work. Otherwise it would be easy. Every time we see a pin bar we could make money. But the reality is they're not 100% reliable, but they can be reliable. Now why do they work? Well, if we look at a pin bar and try and recognize what has gone on here, we can then understand why these pin bars are used in trading. So if we remember that wicks are created by where price was, they are a footprint of price. If we look at this pin bar, during this 60 minutes, this is a 1 hour chart, price was all the way down here at the lower end of this wick, and then price was pushed all the way back up and actually closed bullish. It closed higher than it opened. So when we understand that, we understand the significance of these pin bars, that there were enough buyers to come in and reverse the seller momentum. And we have two pin bars together here. So sellers push price down, but buyers push price back up. Sellers push price down, buyers push price back up. It's showing that there is a lot of strength in the buyers and sellers are failing to push price down. If we look at the example up here, buyers push price up to the top of this wick, but sellers came in and pushed price back down. So buyers kind of failed to make a move higher, and sellers actually won, even though buyers were able to give this thing a good push initially. So they are pin bars, and you can now start combining what's been taught in this course so far to realize the significance of all of this. So if we look at this uptrend, if I get a pen, we have a push and a pullback, so a swing high and a swing low, a push and a pullback, we go for another push. So if we have identified this trend and we want to get on this trend, we want to go long, where's the best place to get on? Well, as before in the previous video, I mentioned that getting on a pullback, you'll get a better price. So if price is pulling back, we actually get a pin bar here, a bullish pin bar, and a second bullish pin bar. These would be potential signals to go long, to open the position. And you'll see after these pin bars, price starts rallying. Okay, so sellers keep pushing price down. They're unable to push price any further. Buyers are coming into the market and we move up. That is an ideal area to join this trend. So they are pin bars. You could also use these as trend reversals. So if price is uptrending, we keep making higher highs and higher lows. Another higher low here. Here are our highs. We go for another higher high, but we have a pin bar, a bearish pin bar this time. Buyers fail to push price higher. They did have price up here. It looked like we were going to have a higher high. Sellers coming and push price down, and we actually close lower. So this could be an opportunity to go short and trade against the trend, and you'll see that price actually starts downtrending after that. So that's pin bars. The best thing to do with all of these candles is to go through them on charts and look for these things and see when they worked or not. Now with pin bars, it's important that you don't get confused with indecision bars or indecision candles, which have long wicks either side with a small body. This actually means that the buyers or sellers don't have the upper hand during that candle. We moved up, we moved down, but we've pretty much closed where we started. So there's been no clear winner, the sellers or the buyers. We're indecisive. So that's another candle. Now, Doji candles are another single candle setup. It's just one candle, and these can be similar to indecision candles like that one, or similar to pin bars like the two on the outside, but these generally have no body at all. And these Doji candles generally mean exhaustion. If you think of a chart, you know, if we're moving up strongly, nice bullish candles, we're closing higher each time, and then we get a Doji candle where we don't close any higher, we're dead. It could mean that the buying momentum has died out, that they're exhausted. We closed higher, we closed higher, we closed higher, we closed higher, and then nothing. We're unable to close high that time. This could signal a retracement, say. We may then retrace and have a swing low before moving higher. So let's see if we can find any dojis on this chart. They don't appear as often. This demonstrates exactly what I just drew on the chart. Closed higher, closed higher, closed higher, closed higher, Doji. You'll see that we just have this line. Price is the same at close as it was open, and then price falls down. Let's see if we can find another. This is pretty much a Doji with a very small body. It's kind of a bullish pin bar and a Doji. Some people may think that's a Doji, some people may trade that as a pin bar, but it's the same principle. You know, price coming down strongly, price is exhausted, and we move up before moving lower again. Now what's also interesting about this move and this move here is look how far sellers can push price. Look how far sellers push price again and again and again and again. You'll see these last couple of candles that sellers are able to push price significantly less than the initial move. It's like they're getting more and more tired with each candle. And then we have the doji in reverse. The same here, you know, if you look at this size of this candle compared to this one, the buyers are getting tired. Let's just see if we can find some more dojis. There's a doji there, but that one doesn't really work. Some dojis there. There's a doji here. So we come down, doji, reverse. What's next? Double candle price action setups. So these are setups that require 2 candles. These are engulfing candles. These are very widely used in price action trading and technical analysis, just as much as pin bars. Really, pin bars and engulfing candles are widely used. They're very common. So an engulfing candle is a candle that engulfs or overshadows the candle previous. So we have this bearish candle, we then have this big bullish candle that beats the size of the previous candle. Same here. And here are some bearish engulfing candles. Price moves down, it's a lot bigger than the bullish candle previous. Price moves down, it's bigger than the candle previous. They engulf or shadow the candle previously. And once again, this is a bullish engulfing candle that can signal price moving on the upside. These are bearish engulfing candles that can signal downside price movement. So let's go back to this chart. And there's one right here, look. We have this engulfing candle. The bullish candle engulfs the candle previously and we move up. The same here with a bearish engulfing candle, engulfs this candle previously and price moves down. There's another there, another bearish one. Now why does this work? Well, if you just think about it, it's all common sense. If this is a bearish candle, if that's red, we opened here and closed here, and then we have a candle like this where we open here and closed here. It shows that in this hour, if this is an hourly chart, it shows that in this hour that the buying momentum was a lot stronger than the seller momentum the previous hour. So sellers in their hour were able to move price this much. Buyers in their hour were able to move price this much. So there's a lot more buying momentum than seller momentum in the last 2 hours. And then price can move on the upside. Once again, these things won't work all the time, but they can just act as signals, and they're meant to be used as part of trends and ranges, and later on we'll go through support and resistance. It's all meant to be used together to analyze these charts and make good trading decisions. So we have an uptrend. We used this example last time, the pin bars. There's another example we can use just here. Price is pulling back and we have an engulfing candle here. Another one here. So these can be signals to go long, and sometimes you can combine these things with pin bars. So once again, we failed to push higher with this pin bar. That's then followed by a bearish engulfing candle. So that could be considered a very strong setup, a pin bar followed by a bearish engulfing candle, rejected at high, then price starts downtrending. Once again, just look at charts and try and identify these things. Watch this video again, read through this material. It's all going to help. Now, there are a lot more setups. There'll be other courses in the future. If they're not already up there, just click on this button and you'll be able to see even more setups. The setups in this video are just the most commonly used setups. There are a couple of triple candle setups or 3 candle setups. morning and evening stars, which look like this, and inside bars. Let's look at inside bars because these are fairly common too. An inside bar is when you have the first candle and the second candle closes within the range of the first candle. So the opening, close and high and low are within the high and low of the previous candle. And then the third candle is when we break out. It's kind of like a mini range. If you think of a range in market, when price moves between an area and then we break out and price can move strongly in that direction. An inside bar is the same thing. We have like this mini range moving between and then we break out. Let's see if we can see any on our charts. Let's go back a bit, see if we can find a nice trend with an inside bar. These are not as common as Pinbars and Engulfing Candles. If we go to a 4-hour chart, there's a range here. There might be a nice inside bar. Okay, so if we wanted to trade this range, so buy down here and sell up here, or sell up here and close the position down here, buy down here, we could potentially have an inside bar. I could be wrong. Let's have a look. Okay, we have an inside bar here. If I just zoom in a bit. With this big bearish candle, here's the high, here's the low. The next candle closes within that range. And then the third candle closes out of that range. This is at the range support. So another reason why we may be looking for a signal like this, and then price moves higher, actually breaks out of the range too. Let's look for some other inside bars. There's one here. Same sort of thing. With this big candle, the next candle closes and opens, and the low and high are within the range of this candle. The next candle closes out and we move higher. Let's try and find a bearish inside bar because they were bullish ones. Okay, there's sort of one here. This is a bit different because it's more than 3 candles, but we have this big candle here. Here's the high, here's the low. This candle open, closes and has a high and low within the range. So does this one. Then this candle, the fourth one, this time it's 4 candles, not 3, breaks out of that range and we move lower. So they're inside bars. And then we have morning and evening stars, which basically create a doji followed by an engulfing candle. We normally have a move up, doji, and move down. And there is one just here, look. Move up, doji, move down. That's the setup. Go short and price is down trending. We're on a pullback. So that's good. Let's try and find one the other way. There's one here, look. Move down, doji, move up. That's the setup. And price moves up. Price is down trending. Here's our low. We go for another low. We fail. We actually get a pin bar, we get another pin bar, and we move higher. Hopefully this gives you an insight into these setups. Read through the material, watch the video again. There are more setups than this, but these are the most common. There will be courses here. If you click on this button, that will take you to more setups and perhaps spend more time on engulfing candles and Pinbars and the other setups that I've gone through in this video. Thank you for watching. Please go to the next lesson, which is support and resistance, which is perhaps my most favorite lesson, and support and resistance is what I use most in my Forex trading.